We just keep going up, Peter. 4.5, 4.6, 4.7, 5 to me would seem like the next stop. Can this stock market handle a 5% yield on the 10-year?
No, I don't think that would be an unscathed situation. And maybe today is the first sign where the current level and higher is what bothers the equity market, because it's always very difficult to say, okay, at what level yield do stocks care? You don't really know until you see it, but maybe today is one of those days. And importantly also, it's not just a rising U.S. yields. The Japanese 10-year near a 30-year high.
I know it's not just us. It's a global issue. I'm not picking on the United States.
Yeah, but either way, it doesn't make it any better.
It's actually worse in some ways because there is no haven then for the markets to look at. Mike, I'm going to ask you the same question. Do you think this stock market, given all the borrowing around AI, given everything else, can handle a 5%, assuming we get it, 10-year?
Well, that is certainly a little bit higher than where we are today. But one of the biggest things I think that, is a surprise this year is not that, yields are higher. It's that earnings have been able to handle the higher level of yields. And a good portion of, the increase in yields we have this year is due to stronger real underlying, economic activity, and that's showing up in earnings. This level of yields or around this last year firmly meant restrictive policy. This year, the market is kind of repricing exactly what restrictive is. So I do think the very strong earnings backdrop that we have in real economic activity can do a pretty good job of offsetting the higher level of yields that we're sitting with now, in the market.
But don't, Mike, bond yields, borrowing costs, they do in some way impact earnings, do they not?
They do, absolutely. But, you've got a couple different themes this year going on, right? You've got a lot of the AI spending out there, which, is impacting productivity, or at least the expectation of that. You have oil that's creating uncertainty around inflation, and we have the bond market trying to figure out which one of these two forces is winning. And thus far this year, the overwhelming force that has been winning has been earnings, and that can be seen with a lot of the earnings surprises. The market, price is just where it is. But really the next phase and what we need to look at as we go for the second half of the year, is this AI not just turning into revenue growth for memory names and, the SK Hynix and Sandisk of the world that are actually up today, but actual real productivity in the market.